Thank you, and welcome to Everyone Hates Your Budgeting Process. Super optimistic title, I know. I'm Adam Rakich. I've spent most of my career helping people out with their budgeting, forecasting, reporting, statutory consolidation processes. This year, I've started Northexis. We're a boutique consultancy doing just that. And while a lot of the time that does involve putting people into specialist systems if they've outgrown their spreadsheet process, it's not always the case, because so often when we sit down to look at what people are doing, we're looking at their processes, what's working, what's not, what's good, what isn't, and making positive changes. And so many of those changes don't require a special system at all. You can do it however you're doing your planning, and that is what today is all about. One thing, you're going to hear me say business a lot. That's not because things are not related or relevant for charities who may be in the audience. I just don't want to say organization over and over again. Okay? So, tip number one, we started on a negative note, so chin up, turn that frown upside down, because your budget holders can smell your fear. Yeah, budgeting and forecasting is this big, hairy, awful thing. No one looks forward to it, but it doesn't have to be, right? This is a process. It's got people. You can improve it. And the first step in doing that is to relax. I see so many people clenched fists as they go into their budgeting season. And guess what? If you think budgeting is going to be awful, you're right. That's not hippy-dippy nonsense. That's just basic science. If you approach this whole thing thinking, oh, I better half apologize, and then your face looks like you're expecting that someone's going to punch you, do you think the business is going to go, yes, let's get stuck in, this is going to be great? No. They will pick up on your misery. They will walk all over you, right? You have to genuinely believe that this is a good thing for your business. If you don't believe that, fair enough, but hopefully some of the other tips that we're going to go over will help you out with that. But just because it's a bunch of work for everyone, that is not a reason to dread it. Newsflash, we all get paid to work. They all get paid to work. They do hard stuff all the time. I think it is super unfair that finance processes, things that you have to do, get singled out as bad in a way that other parts of modern work are not. You should think that's unfair as well. Because what are we going to do instead? Everyone just spends what they want? Or worse, they come to you every day and ask for approval to buy Post-it notes or balloons? No, that would be extremely stupid, right? We do budgeting because it is the best way to work towards the best resource allocation in the business. It has an astonishingly large number of problems, that's true, but you don't have to apologize for that. It's not like everything else that people are doing is perfect. Having said all that, that is not a reason to not try and make it better. That's its own trap. I've seen people doing weird or outdated things because it's going to suck anyway, so why bother, right? Or what I kind of think is worse, I've talked to finance people and they're behaving like the budget is something that is happening to them. It's not. It's your process. You can improve it and you can make it better. And specifically, and I want you to listen to me very carefully on this one, not only is planning very important, but it is also one of the best ways that you can easily increase your profile within the business in a positive way. So approach it as what it is, right? Yes, it's hard work, but it's an opportunity to help the business, and as a result, an opportunity to help your team and to help yourself. And yes, it is hard work. In fact, today is unlike any other era in history, right? It's so much harder. Not only do we have unprecedented change in every aspect of our lives, we have this insane surge in political corruption in superpowers that we won't care to name. And while we're at it, have you seen what kids are wearing lately? That last one is probably not likely to affect your planning process. I put it in there to make a point. These are not new complaints. I found King Naram Sin bemoaning political corruption in 3800 BC. Yoshida Kenko in Japan said depraved modern fashions, I hate them, in AD 1330. And the Greek philosopher Heraclitus noted the constancy of change back in 500 BC. LinkedIn posts, blogs, the business papers, they all love to say it's all unprecedented. It's not. Okay? The details are new, sure, but everything's been changing all the time. Are you supposed to think that 10, 20, 30, 40 years ago, people were looking at headlines that said everything's the same, nothing much going on? Yeah. Let the influencers and the media do whatever they want. The problem that I have with it is that if you believe that stuff, it makes it easy to not try. Because against this tide of madness that no one has ever seen in their whole lives, how can your planning process ever compete? But that's not true. It can compete like it always has. It will be wrong in so many ways, also like it always has, but that doesn't make the process useless. So I'm glad I've solved all of your mindset problems. We're all now super positive about planning. Obviously not, but bear that in mind as you go through. You do have to approach this in a positive way, right? You can make your planning better, you can benefit, and the business can benefit. Right, so practical tips, zero-based budgeting. Who knows what zero-based budgeting is? Show of hands. Right, if you do not, zero-based budgeting says, if you just take last year's budget and roll it forward and layer on a few percent, you're going to lead to massive overspending. So what you do instead of that is you don't do that. You give them a blank sheet of paper and you say every single account, you have to justify your existence. The theory being that that will lead to tighter spending. And that is probably true, but you shouldn't do that, mostly. That's an awful thing to do to people. It's not normally worth the pain. Okay? Sometimes there's very limited situations where I might recommend it, but mostly not worth the pain, certainly not regular, certainly not for the whole business. So why do I put it up? I want you to take that approach, take that eye, and look at your budgeting process. Don't just do what you did last year. Get together all of your templates, all of your processes, and actually assess them. Do a cost benefit. Is the value to the planning process worth the amount of time that it's taking my budget holder to do it? Have I genuinely made this as easy and simple to get through as I can? Because very often when I've done this with clients, we find that there's a template that was because of a strategic initiative that they binned off 3 years ago. Take the opportunity and the time to go through this at least once a year is well worthwhile. And then pick some battles, because as a business, we want more revenue. Yes. You should nod. That's kind of basic accounting. Yeah. We want lower margins. No. I was rude to you just then and I got it back. We want higher margins. We want lower OPEX. But if you want to drive meaningful change across the business, you can't demand that everything gets better at once. If you just say improve everything, that's just a wall of noise to your budget holders, right? Sit down with your leadership team, pick 1 or 2 things to improve for each budget cycle. It makes it easier for you to get the theme across, and it makes it a lot easier for them to keep it in their little heads as they go through doing your templates. If you must, there's a little cheat you can do, because of course, if you choose a ratio, you kind of get 2 things for the price of 1, but only if you must. And then please, please, please choose some expected levels. Here's a really common story. It is absolutely awful for budget holder engagement. Your budget holder sits down to build up their OPEX budget. They complete it, they submit it, it goes up the chain to whoever. Whoever bounces it back down and says it needs to be X pounds less, it needs to be X percentage less. Normal, right? But most people approach their work in good faith. So if you're their budget holder and you sat down, they think, why did I spend all that time genuinely thinking about it and telling you what I need to run my department for the year if you're just going to say no? And you may say, oh, that's unfair because, well, we have to consider it with all the other departments. We have to look at what the revenue forecast. Oh, and then Trump's doing, yeah, I know, but it doesn't matter. It feels really unfair to the budget holder. So what I would strongly suggest that you try is that for every template that you hand out, you and or leadership, whoever needs to do it, decide on acceptable or expected levels for that template. Yeah. If you're worried about overspend, then fine, put it down a little bit lower than you really think. But you always have to make sure that you say, if you think you need more, you can ask and we will, if you justify it, maybe. Yeah. Notice the end result's the same. The budget holder does not necessarily get what they want. But in budgeting, as in life, psychology is always around us. It is so much better to say that you can ask for more, but you might not get it, than just let them to freely build things up, only to say no. And make sure that you put that amount that you decide in a huge jazzy colored font at the top of the template. And with all these templates, whenever you review them as you evolve your business, there'll be questions. Can I model this part of the business that we haven't done before? Oh, can we add some more detail over here? And look, the answer is normally, yeah, most things are possible. But it's normally the wrong question because, to paraphrase Jeff Goldblum playing sexy Dr. Ian Malcolm in Jurassic Park, don't spend so much time thinking about whether you could that you don't think about whether you should. Now, hopefully, you won't cause as many deaths as happened in Jurassic Park, but often less is definitely more. More detail always comes with a cost. You need to ask, is that cost worth paying? An example where more detail is generally good, most of us salaried staff. It is easier to plan based on people. Here's person, start date, salary, whatever, rather than expecting a budget holder to just come up with a number off the top of their head, right? And it's going to be a lot more accurate. But what about more marketing detail? Maybe you've been doing marketing spend per detail, per period, per channel, I should say. And you don't want that. You think we need to do it per campaign. But then someone's got to spend the time doing that. Is that a good idea? I don't know. You know what marketing you do. But the point is, somebody has to ask the question, and you need to ask the impacted teams, not just think about it yourself. If the answer is yes, you do get something out of it, great. Just don't sleepwalk into something that might not add any value to the process. And if there is ever any doubt about whether something falls into the yes bucket, then get rid of it. Do less. Because it's always better to add something in later than to do something, make people do it, and then realize it wasn't worthwhile and damage the relationship. And that takes us to driver-based planning. If you take one thing from my session today, please be it that you should always think about when can you let your budget holders not key in a currency amount per period. Sometimes it's what they want, that's fine, but mostly your budget holders are going to be happier if what they're asked to put in relates to their day-to-day. Driver-based planning. The key is they don't think about final financial numbers. They think about whatever drives their slice of the business and plan based on that. The trouble for you, I guess, is that that will have to be different for every department. You need to suck it up and deal with that complexity. Sorry, but it's well worth it. Okay? What the drivers are, you probably already know if you think about it, but visitors to your physical locations, your website, average spends, conversion rates, number of units. Contact centers, for example, they tend to have very clear metrics for how many calls one person can handle in a day. Brilliant. There's your input. Cascade loads of stuff off that. Even someone like sales. We may think sales is comfortable dealing with financial numbers because they want to know how much they're going to get paid. But even they would prefer normally to have number of deals, average deal size, and have it calculate based off that. And if you think you can't do this, you're wrong. Even if it's just people, right? Most of you, your biggest expense is going to be people. Well, every new hire, automatically, training, recruitment, onboarding, equipment, straight into your fixed assets. The budget holders don't have to touch it. Yeah. A useful shortcut, if you genuinely can't think of some, Google startup financial model for your business, because the startup world gets this. All of their modeling is based on subscriber counts and things like this. You get some great tips from there. There's a really useful fringe benefit to driver-based planning, and that is it's a great way of surfacing things that are not right or just don't make sense, but that might get hidden in the financial numbers. Back to sales, for example. Your commercial director might look at a figure of 2 million and think, yeah. But if instead it says, well, to get to 2 million based on your average deal size, it's 200 deals. Oh, actually, I don't think my sales team can do this. We need to look at hiring, et cetera, et cetera. Which leads us to the classic, obvious but easy to ignore step, talk to the business. It's easy to get caught up and not do that, right? It's easy to just decide for them. Half of them don't care. It's more work for you, right? Obviously, I don't agree, or I wouldn't have taken the time to build this very in-depth slide. You need to view improving each department's budgeting process and their experience. It's an incredible Trojan horse to just building your relationship with them and in turn, building your empire in the business. Yeah. Much of the business normally views finance as a taker. Not me, I think you're great, right? But for so many of them, you turn up, you ask for things, and the rare times you're not saying no. But you're not going to do that. You're going to turn up and you're going to ask, how can I make this process better for you? And you will be amazed that when you start to do that, how much you can turn people who are very difficult to work with into allies. And guess what? You don't just do the budget. So there's other stuff to talk about as well. Now I get it, this is a budgeting session, but a fabulous side effect of you understanding how the department needs to plan is that you will just understand the department. Yeah. And a lot of people will find that finance hasn't ever really sat down and tried to do that before. Ask them open-ended questions about how their department runs. Open-ended is not, what rows do you need on your spreadsheet? It's more, tell me about your day-to-day. What's difficult for you to plan? Because the thing is, if it's hard to plan for, it's probably just hard. And if you ask those open-ended questions, the order in which they tell you things is a fantastic shortcut to knowing what's top of mind. Yeah. And we all want to be strategic partners to the business, right? I only read that on LinkedIn 32,000 times an hour. Well, do yourself a favor. You're there. Why not find one non-budget thing that you can improve for each department? Bonus points if they had a department has visibility on it. But if they don't, anyone is a benefit. Even a small change to a report or a KPI can often be super valuable. Makes things better for the department, makes things better for you. And during all of this talking, you do have to remember you've got to sell the benefits of what you're doing. Yes, it's good to have help from the top, to have that executive sponsor or whoever, but to reinforce your positive messages, not to threaten them into compliance, right? People respond a lot better to positive messages rather than negative ones. If you don't like me saying you should go and sell, sell. Selling so often is simply explain to them why we do something in a particular way, why we've decided to change. Yeah. And it's also often helpful to acknowledge any previous problems that they've had. Yeah. And it's easier to sell if it's nicer to use. Looking nice matters. That is a fact. Do not argue with me. There is a one-time investment. Take all your templates, put in your lovely corporate colors, get rid of the insane default colors that Excel puts in, put in some nice colors that make sense. Borders, white space, they're tiny things that shouldn't make the business find you a lot more professional, and it shouldn't make it much more likely that they'll engage with it, but I'm afraid they do. And the return on your time is absolutely gigantic. Right. Where driver-based planning is not for you, where it does make the most sense to key in financial figures, think about how can you make it easier to be accurate. Notice I do not say make it easier. It's not particularly hard to jam in a bunch of numbers to get finance to shut up and go away. That's not the problem. We want to make it as low effort as possible for them to give you good numbers. And if you're just giving them a grid with accounts and periods, no, bad. With a little bit of work, you can give them a drop down in Excel. And sure, they can put in the amounts per period, but you could change to an automatic spread, right? Put in the yearly amount, spread it evenly. Put in a yearly amount, spread it based on last year's actuals. Seasonality, just like that. And you do have seasonality, even if you're B2B, right? Things just might be a little quiet on Christmas in August. Or maybe the number of days in the month. Or if it's less material, sure, let them uplift it a bit from last year. And put in data validation. It is not difficult to make a big red thing light up at the top if someone has put something that's not a number in where they're only allowed to put numbers. Or if they've gone above their expected levels, which we've all put in now from the earlier tip, but they haven't put in a comment explaining why. It's a one-time investment in your future sanity that you will not regret. In fact, wherever possible, don't let them put in the wrong thing at all. Drop-downs, often so fantastic, limited options. And the other thing, bonus tip, is you should chuck in vertical analysis. If you've never heard that term, it's one of those annoying fancy terms for an obvious thing. It means that all of the lines should be compared to one base figure. So if I'm doing my OPEX, it should compare all the lines to, well, what percentage is it of my total OPEX for my department or my revenue or wherever it might be. It's a fantastic sense check where sometimes the absolute numbers just won't make sense. And if you think, I will use predictive forecasting to make this easy, sorry. Statistics is a really weird thing if you haven't spent much time with it. And most people, myself included, don't particularly understand it. And as a result, often don't understand predictive forecasting. This may be a super unpopular opinion here at Accountex, but most predictive forecasting that's easy to do is just so simply based off historics that it's not really suitable as a core methodology, because last year is not this year. You've added new products, locations. The things you did have last year, you're doing it completely differently this year. I'll meet you in the middle with it. If you really want to put predictive forecasting in the hands of a budget holder, do this for me. Don't do that this time. Run your normal process, run the models alongside it, and see how the variances pan out. If it turns out the predictive models were better, then drop me a line, I'll buy you a coffee, and I'll apologize. But normally, I find they're either hilariously wrong, or they do work, but people spend so much time massaging them to make them work that you might as well have done it the normal way. Plus, if you give budget holders a big button that says predict, how many of them just push it and then move on with their lives? A lot, normally, yeah. Now, if you have sales, you probably need what I call a shadow revenue forecast. Revenue is so often the biggest pain point because sales has got this thing they call a forecast. But it's nothing like what we call a forecast, right? A sales forecast is a rah-rah, hooray for business thing. It's a different strategy. We need accuracy. And there's a lot of value in just acknowledging the difference, maintaining one version for the rah-rah, and one version that we have where we actually put in what we really think is going to happen. Can be a bit hairy if you're with a PLC, of course, but you can get that from sales leadership, or maybe you just look at your variances and then extrapolate based off that. I love this quote. This is a quote from the people who brought you more than 80% of boats sink due to holes. If you're already doing your balance sheet and cash flow forecast, great. I put this in because I've seen so many people scared of it because I'm barely doing the P&L. I get it. Get around that fear by realizing you don't need to involve the budget holders particularly. Do the P&L plan, have everything else drive off that using your assumptions. Day sales outstanding or your known percentages of 30, 60, 90-day payments, receivables, CapEx, unless you're capital intensive. It should be driver-based anyway. And then once you've got some balance sheet, just do an indirect cash flow. Assign all the balance sheet accounts to cash flow headings, done. Obviously, there's loads more you can do. But for so many of you, that'll be more than you ever need. And it'll be an improvement if you haven't got it. Last point on the planning side, rolling forecasts. Sometimes it feels that every webinar in the world says do rolling forecasts, but point of definition, if this is obvious to you, fantastic. But rolling forecast is not where you actualize a period, but you leave the rest of the budget alone. That's just forecasting, or at least the start of it, okay? Rolling forecast, actualize a period, add on a plan period, or a quarter, whatever makes sense for you. You always have the same amount of future, usually a year, whatever works for you. Obviously harder to deal with. You need to get the budget holders involved a bit more. Most importantly, you simply cannot do it if you're trying to do your classic budgeting process every period, every quarter. You need to be doing things like your driver-based planning, yeah, and all these other things. Very much a walk before you run. But when you start having more regular conversations, it gets rid of the big, hairy, awful annual thing and replaces it with a more regular thing where you're having conversations. So now you've done your planning, you've got your actuals. Fantastic. You better trust them. If you don't trust them, go fix that. Assuming you do trust them, generate your reports. People can only focus on so much at one time. It's a lot less than you think it is. If you highlight every variance, which is probably every line, you're highlighting nothing. How many Christmas tree reports have I looked at? Every line green and red. Budget holders tune it out. Pick a level that is useful so they don't just tune it out. And then it makes it a lot easier to ask for commentary to explain the differences. And do that. You can't do it. Make them monitor their own performance. Otherwise, they'll never be engaged. And important tip, comments must roll forward. It is super annoying to a budget holder if they're wrong in period one. They put in a comment and they have to put the same comment in next reforecast. Same again, same again. And while you're at it, simplify everything. People are always saying, people outside of finance don't like numbers. We need visuals, we need charts. I mean, yeah, I guess, but what most people need is less. If you're delivering the same report pack to everybody, you're probably missing a big chance to improve their process. Deliver only the numbers they use. Ask them what that involves. And if you're multi-currency, please make sure that currency fluctuations don't explode everything and your relationship with your budget holders. If you are multi-currency, your variance reports must have budget at budget FX, actuals at budget FX, actuals at actual FX, then your performance variances and your FX variances, problem solved, everyone's happy. And you need to look at these, same as they do. It's not, oh, things are wrong, oh well, no. I know this is obvious in theory, but it's easy to lose sight of, right? If you want better forecasts, you need to work out why this one wasn't as good as it could be. And you won't do that with one report. You need to do it in the next reforecast and typically, ultimately, multiple budget cycles. Because you will identify that there are areas you consistently overachieve or underachieve. And then you got another job, which is to find out why that is. But fortunately, you're all now having regular conversations with the business. So that's easy now. Yay. And again, chin up. There are lots of budgets and forecasts. Sorry, that sounds like a threat, but you get another go, right? Try something, adjust, try something again. Michael Jordan quote, you miss 100% of the shots you don't take. Don't let fear make you not take the shot. You've got to try and stretch the process, stretch the organization, or you'll never know what you can actually achieve. Last tip. I want to leave you with the philosophy and wisdom of James Bond. Because James Bond, of course, a famous seducer of women. And of course, where you can, you should, metaphorically, seduce your budget holders by explaining why you're doing things, by helping them out, by making things better. Seduction is a marvelous way of getting what you want. But James Bond also recognizes that you can't seduce everybody. Sometimes, to get what you want, you have to shoot someone, metaphorically. There will always be people that you can't reach. They just hate you in finance by default, okay? That is not a failing on you or the process. It's an important thing you're doing. It needs to get done. If you're having difficulties, don't feel bad about bringing in the big guns. Your boss, executive sponsor, whoever. Obviously, there's tons of nuance and care and politics to be dealt with. But the main thing is, it's not your fault if you can't win everyone. Shoot them where you need to. And look, before you sat down today, really, you already knew a lot of what you needed to do. Just have faith, communicate with the business, and most importantly, try. Don't worry about what the trends are on LinkedIn or what the influencers are saying. They're always trying to find something to talk about or sell. And you and I, we're just going to get on with it. And thank you so much for coming. That's my session. I'm here if anyone has any questions or wants to talk to me after. Thank you so much.